Traders, can I keep it real? I like to ask everybody, if you've been a consistent viewer of what we've been putting out here, I just like to ask, and please go ahead and write this in the comments. Are our levels hitting? When we outline something on a chart, does it turn around there when we say it probably is going to turn around there? For example, this area of liquidity right here, can we just zoom out a little bit, right? Just this little area right there. We said that price will probably turn around right there, right? You're forming that range. A lot of what we say isn't really proven out until, a few days later. But I want you guys to go back just a few videos ago. We drew this level, right, a few days ago, and we said it would probably stop here. So we want to ask people. We want to just ask a simple question, ask a real basic question for anybody who tunes into this type of content, because for folks who watch this type of stuff, you want to learn how to be a trader, right? That's who we're gearing the channel towards. We are TA guys. We are chart guys. But our charting and the way that we approach charting is a lot different compared to what most people do on YouTube. So I want to ask you, right, as a viewer, as someone who's been trying to learn how to trade, has the things that you've been learning on YouTube worked for you? Have they been working? Are the levels and the things that these guys call out on their channels, have they been hitting? And if they're not hitting, okay, then welcome. If they are hitting, are they hitting as consistently to help you build a winning percentage of 80 to 90%, which I'm displaying here, and let me not miss that loss. If whatever you're doing in the market isn't producing a board of green like this for you, no matter how big or small the wins are, because the winning number of what you take home is relative to what you trade. But can you win consistently? That's the question. And if you have not been able to, you found a home. Welcome to the long and short. Let's go. Welcome to the long and short. Maestro here. Thank you for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a long-term trader or a short-term scalper, we have some information for you. If you want to be a better crypto trader, then you found a home here. Welcome to the long and short. Let's go ahead and get into it. So first thing that we're going to talk about today is this trade that we took on the news that Jerome Powell was basically in a meeting with Congress, giving all of the hawkish news about what the Fed is going to do come March. We're going to raise the rates. But it's not just that. It's also the fact that he said we're going to tighten the balance sheet a little bit. So a lot of people are thinking that we're going to just start printing money because there's a war in Ukraine and it's going to drag us in eventually. That's essentially what people are saying who think that we're going to print a bunch of money, is that we're eventually going to end up going to war with Russia. I don't think that that's the case. I think that if there's any aggression, it's going to be cyber attacks. There's going to be a lot of different covert things happening, right? It was a Cold War for a reason. When we're in Afghanistan, when we're in Iraq, right? That's a different type of war. And so if things are going to be done covertly, you're not going to hear about it on the media. The things are going to die down. The media may start to bury some of this if it cools down a little bit, but that's a hot zone. Ukraine's going to be a hot zone for a very, very, very long time. This is going to affect the market in a number of different ways, but we still have to worry about the homegrown politics before we worry about the abroad politics. And if Jerome Powell is telling us that he's going to raise the rates and tighten the purse, then we need to consider that that will happen first before we start printing money again. The only way that I feel like we're going to start to really print money again is if inflation starts to die down a bit and the economy starts to go into a recession because they're restricting it too much. All right. Now, if that happens, then of course they'll start to print money again. It'll be happy days again. Everybody will be getting checks. But you have to have the pain before the gain. So do I think that things will start to swing negatively? It really all depends. If they raise the rates a little bit and inflation starts to come down, then they may not have to raise them as much. But Jerome Powell seems to be convinced that he will go as far as he needs to stop the inflation from increasing. How far he goes remains to be the question, but he essentially has the power to do this really at any time over the course of the next year, going into next year. Okay, so All of these factors are giving us clues as to how the market may move. Now, what we're going to talk about is this trade here, okay, that we took on Wednesday. This is 10 a.m. on Wednesday, okay? Now, there's a number of different factors that we were looking at over the course of the week that made us want to go short right here. Now, this area, if we zoom out quite a bit, let's just go out here, okay? Just this area here that we were looking to take this short. You can see we pretty much caught the top, but factors in trading and factors in the market just took us out. We're going to talk about exactly what those things were. We weren't actually at the chart when we got taken out. We weren't paying attention to the market, and things were happening just in regular personal life that dragged me away from the actual chart that day. So I couldn't re-engage. Okay. But there was an entry here. The next perfect entry would have probably been right on this retracement, guys. We knew that price was going to go short, and it wasn't just Jerome Powell. Okay. That's not really the factor that we were even looking at when it came to the market. What do we always talk about on this channel? Imbalance, liquidity, right? At the end of the day, you have big imbalances down here, okay? Back down into the $40,000, $39,000 level, where price initially launched from, right, in the previous real bull movement. Now, when this range started to develop here, right, we just kind of zoomed out a little bit and looked to the left, and we saw that we had areas of liquidity here that price was spiking into, okay? So you're going to set some highs here, and this is ultimately the highs that we need to break in order for Bitcoin to really continue higher, all right? But these little intermediate areas here that don't necessarily reach the highs, there's a lot of liquidity sitting here, right? So when price came up and spiked through that, I said to myself, that's the key. We're in the middle of the week. Price has been bullish for Monday and Tuesday. Monday was the gangbusters day, right? Tuesday kind of cooled off a little bit. Wednesday, we turned around. That's normal characteristics of Bitcoin price. You're going to get a push or a decline in the beginning of the week, and then the reversal near the end of the week. It can start right on Wednesday or more towards Thursday, Friday, right? But this is what we anticipate from week to week to week to week to week. If you haven't seen how this actually happens in the market, just watch it. Watch it next week, okay? Watch it the following week. Bitcoin never goes in one direction during the course of the week. All right, it's going to give you one direction on Monday or Tuesday, and then it's going to turn that around by Wednesday, Thursday, Friday. All right, this has been the normal characteristics in price when it comes to Bitcoin. Now, whether these swings are major or minor, it all depends, right? Those are the variables that you have to face. But understanding just how the markets are going to move from the beginning of the week to the end of the week, that gives you an edge. So we were already anticipating that Wednesday, Thursday was going to be when price started to reverse a little bit, all right? Because Monday's move was so aggressive that we just said to ourselves, it has to come back down. It has to. There's no way that the price is just going to keep pumping up this fast, this hard, okay? Now, who bought Bitcoin here? There's a number of different theories on who this is and why this happened here. But if we look at this, this is a 1 hour chart, okay? If this was a sustained buy from like regular people, okay, it's not, first of all, the candles won't be this big, okay, because this takes millions of dollars to push Bitcoin this fast in an hour, all right? So this is not a person, this is not a group of people, this is not a bunch of residents of a country. It's not. This is an institution, this is a bank, this is a country itself buying Bitcoin right here, okay? You need major funds to move the price 1 percentage point or greater in an hour, okay, guys? So this first move here was 4.94%, okay? To move the Bitcoin price in 1 hour from $37,000, what was this? $37,000 to $39,000, essentially $2,000 increase in price itself for Bitcoin. All right, if Bitcoin has almost $1 trillion market cap, guys, that takes almost billions of dollars to do, to push it this far, okay? So ultimately, these movements were not people. People tried to jump on the back end of it, and this is usually when the market is going to catch you, okay? So the big aggressive move here kind of got us right up into these previous high levels of liquidity that we had drawn out before when we first started to identify these ranges here, okay? Now, the biggest question for us starting off was, where's the range? Where's the range? Where's the range? We found the range, right? So from the initial price decrease starting in January, right? We found the bottom, we found the top. And now we've revisited the bottom, we've come back to the top. So this does confirm that we're starting to swing in this range that we anticipated would start to form before the FOMC. Go back to other videos. We're not saying anything that we haven't been saying for almost 2 months. With all of that in our favor, we said we have to go short here, right? And Jerome Powell, the kicker was Jerome Powell's coming on television to talk about how hawkish the Fed is going to be in March. So all of the factors lined up for us to go short here. So what went wrong with this trade? Very simply, life. Life will always get in the way of you putting on a really good position and maintaining and keeping it. Let's talk about what went wrong. And, we talked about all of the things that could have went right. And we'll talk about how large this percentage gain would have probably actually been, because based on our rules, we'll talk about what those rules are as we take profits. Based on our rules, we would have probably already been out of this trade with a pretty substantial gain. But things went wrong, so we didn't take it home, right? We took home $9 when we could have taken home close to maybe a couple of grand on this move. But let's stop complaining. Let's classify what happened in the trade. All right, so we're on a 5-minute chart. We saw the short here. Now, there was a couple of different things that were happening, actually. Paper trading sort of froze on me. So the first entry came in here, and it didn't register. So I hit the button again, and it registered the second time, but it didn't put up the order. So I had to refresh the page, and it only caught one of the orders. So that's this cell here, right? So you can see they're pretty much right at the same level, 44,453.5, and then another one for the same exact number, okay? Now, being that one of those orders executed, one didn't, I was a little bit confused about what was going on. So I said, okay, let me just put my stop, because price moved automatically in my favor right away, right? And what I was trying to catch was, I saw that this price imbalance was created, price came up, sort of dipped into it, created the other high, and then fell hard into this imbalance here. Then it sat sideways. I said, if this happens where price pushes up again, this is where it's starting to retrace these moves back into these larger areas of imbalance for this red candle here, okay? So just understand what happened. And this is all on a 5 minutes, so this is very fast, tick, tick, tick type of action, okay? Price moves up on a 5 minute, okay? This is 5 minutes price action. This is going to throw traders in to say, I'm going long. Look at this 5 minute candle, okay? We're retracing, boom, okay? Now, here's what I'm thinking. Where's the peak? There's an order block right here. And if we zoom all the way and go all the way to the left, right? This is sort of the last peak push up before price really fell in previous price action. So if price is going to exhibit the same exact characteristics of behavior, then I'm expecting them when price comes into this level, all right? It's going to do the same thing. If it breaks really hard through this level, then trade off. We're going long at that point, okay? But it didn't. It kind of sat here, turned around, created this big imbalance on the downside. Now, what did this imbalance on the downside do? It pretty much filled this green imbalance, green candle imbalance, right? But it didn't really do it all of the way. So I'm anticipating price is going to fall a little bit harder. It does, okay? Then it shoots right back up to fill what? Some of the imbalance to the top side here. Now, if we're bearish, we understand that price is only going to peak to these areas before it falls harder. Peak, okay? You're trying to catch the peak. It's the move on the upswing of the candle that's most scary to get into, but that's the point where you want to catch the short. So as we saw this imbalance get filled, right, or start to get partially filled, we felt like this was a good entry point. All right, so we got in here, but this candle, right, it started moving in our favor. And as it moved in our favor, we were sort of doing a number of other things at the same time. Mind you, this is 10:30 in the morning. Well, price sort of just came right back and caught us, right? And then pushed down and started to make its way down lower. With that quick in and out play, it did net us $9, right? So nothing was lost, but in all reality, I'm in the middle of a work day because I still have a regular job. I'm minding a number of different items and multitasking on a number of different things. So I'm not able to sit at the chart and just plan and plot the re-entry. But the next one would have been right here, right? Just sort of catching that retracement again. I'm seeing you losing strength, right? Pow, I'm getting in right there again. That would have been the second entry. But I wasn't at the table. I had to leave the table, guys. and you see the price action from there, right? So this is what we essentially ran into when it came to price. Now, where we would have gotten out. Now, we pointed out all of these different areas of imbalance on 5 minute, right, to see exactly where we would have gotten in. Now, where are we getting out? What's your first target if we're short? All right, now we need to zoom out maybe to the 15 minute to get a clearer view of this. Okay. You see this big area of imbalance right here on this green candle. Okay. Now, if price happens to work its way to break all of these lows, and you see price has a number of different lows created here, right? You have one here, one here, one here, one here, right? And they're correlated and in line with these lows over here. Now, what I'm going to do is put my cursor in that dotted line pretty much right up to the bottom of some of the lower dips into price. You see how hard that candle broke through, okay? That candle to the far right, okay? That candle broke through really, really, really hard to take these levels, okay? Now, this is the confirmation that price wants to continue shorter. And once it does that, our next target, okay, is to complete this imbalance. So this is where, okay, price is starting to turn around again here. Let's zoom this out, okay? Now, notice this. Imbalance created here. These are just fair market value gaps, folks. If you're able to find these on candles on the 5 minute, 15 minute chart, 10-minute chart, this is where price may likely be going. All you have to consider at that point is, okay, what trend are we in if we're in any trend? Are we in a range? There's greater factors that you need to consider. Zoom out, go on your higher time frames, get a bias, right? There are a number of different things that you want to do before you fall this closely into your analysis, right, on the chart. But this imbalance area here, once this got filled, right, just look at this candle. Boom. Once this gets filled, price is going to turn around. It's going to give you a different character. But if we're thinking and we're confirming that we're in a range, this is going to be a retracement sort of to either retouch and then refill a previous imbalance that was created, right? Or maybe one up here to go lower, right? Remember all of the macro factors as well. And if you look at price action here, you still have areas of imbalance for price to go back and get, okay? So do we think that price is going to revisit sub 40K level for Bitcoin? I think it's definitely possible before the FOMC, okay? Based on a number of different factors. Now, price could just launch out of here again. That's also a possibility. But if we're stuck in this range, and if there's really a lot of selling pressure right at this level of around 45,000, then we will be in this range. Price could push back up here, knock back down, okay? If it does push back up there, that's what I'm anticipating. Essentially, you have a triple top, and then you will fall, okay? So, lots to talk about when it comes to price action and what's going to happen over the next few days. We weren't able to capitalize on that move, but again, that would have been a nice 6 or 7% move down, right? Let's just take our ruler, the thing that we meant to do from the beginning, just kind of drag this out to see how much percentage gain that would have been, right? It would have been maybe around, 5 or 6%. On that move, okay? And it would have taken us 2 days to do, right? Number of different factors. Imbalances to the downside, liquidity to the downside. Jerome Powell was talking hawkish. There's a war. There's a number of different factors that are keeping us down at 45. We've been suppressed here just based on historical price action. There was a lot of reasons for us to go short here, right? So if you happen to catch this play, salute to you. Congratulations. We just missed it by a hair, man. And it was just bad trading conditions. And sometimes it's like that. All right. But we're not necessarily mad about it. We saw the play coming, and sometimes that's just half the battle when it comes to trading. All right. So with all of that said, what are the next steps for Bitcoin? So we're going into Friday. Friday is always a relatively choppy day and likes to hand out surprises to folks. And you do have imbalances to both the top and the bottom side. So in my opinion right now, price can go either way in the market. And I'm just going to try to play out the proper perspective. There's a lot more power to the short side than there is to the positive side when it comes to price action going into Friday and over the weekend. That's just my opinion. Not financial advice, but I'm looking for a short. And I'm also looking to catch retracements long, okay? And this is the beautiful part about scalping and why we touch on scalping so much, because this is the type of trading that we like to do. We like the price action, right? When you're able to get in this close on the price action and see things on the 15-minute chart, it's a lot easier for you to zoom in, right? And it's really all about market structure. It's really all about understanding market structure, where these things are being set up, your higher time frame bias, and what you're thinking about in regards to where the weight is coming from, right? When we get to these higher levels, some people look at these levels and say, oh, if we break out of here, right? If we break above this high, we're taking off. No, if we break above this high, this is to snatch liquidity from the top side, drag traders who want to go long in, and then send them to the downside, right? This is smart money taking dumb money. That's all this price action is, folks. And smart money understands where the real levels are. Where are the real levels? Every time that we show you an imbalance on the chart, does it get filled? People talk about back testing. Okay, let's talk about it. Instead of us back testing, let's forward test. Okay, this is what I like to do. I like to forward test. I like to drag the chart all the way to the right, look at where the imbalances are in price, and say, okay, does price fill that up? Yep. Okay, where are the imbalances now? To the top side. Does price fill that up? Yeah. Where's the next imbalance? Okay, kind of hard to see right here, but price fills it up. Where's the next imbalance? Let's just look for imbalances to be created. Oh, look, down movement. Price fill this up? Yeah. This is very simple stuff, folks, but you have to be able to be a bit nimble if you're scalping these type of plays. Now notice, we didn't use any indicators. We didn't use any trend lines. All we're finding are areas in price where price moved just a little bit too fast, just a little bit too aggressively. And okay, once it creates this area, what will turn price around? What are the things to the left that could turn price back in that direction? There's two things, okay? It's essentially the same things. Liquidity. If price spikes lower, okay, snatches liquidity, okay, then it has the right to go higher. Same thing as if it reaches these areas of imbalance, right? And we're showing you this in a live example. This is live Bitcoin. You see the time ticker right there, okay? Price comes down to this area, turns right back around. Why does it do that? Because it's fulfilled an objective, okay? If it makes it easier for you, think about price action as sort of like having a mind and an objective. It has a job in a certain type of way. And if you're able to sort of understand what that job is, it gives you better insight as to where price may be going, right? Just like if I know that, you know, my job is to go to point A before I go to point B. And if I do that, then I can go to point C. It's like an algorithm, okay? All algorithms are instructions via computer code. So if A and B are the conditions, then that means you can move to C. If they're not, then you move to D. That's all price is doing on a regular, consistent basis during the day. Now, some people will say this has to do with traders' emotions. I don't think so, not so much. I think that when it comes down to how price actually moves, there are robots and algorithms trading this, okay? It's a fallacy for us to believe that this is all just human interaction on a price chart, okay? Do you know how many advertisements I get for trading bots on a daily basis? You can set them up like with free software nowadays. So the majority of price action, the real robots are the algorithms. Humans are too emotional to really trade, okay? To really be successful at trading. That's why most traders fail. They get emotional. Okay. And I can tell you, I got emotional, which is why I failed on this day. All right. Once I got taken out, I had so many other things going on in the day. My emotions took me away from the charts. I said, you know what? Let me not even worry about this right now. Jerome Powell speaking. I know the price is going to fall. When is it going to fall? I don't know. I don't know. Who cares? Let me do all of the other things that I need to do during the course of the day. And then look what happens, right? Your attention gets pulled away. And this is the end result. But am I mad about that? No, of course not. This is the ebb and flow of what real trading is about. Not getting upset, not letting your emotions judge you and wreck you, right? So if you're able to eliminate the emotions, not get upset when you miss a move, or not get upset if you get stopped out, or a trade goes against you, or price action automatically moves against you. Once you learn how to control those emotions, you become sort of stone cold in the market, and you're able to start to really pull up a lot of different wins from places that you weren't necessarily pulling them from. And it's not just the emotion of how you react after the trade, it's the emotions of getting into the trade. Once you start to put on positions, that's the most terrifying time in the market for you as a trader, right? But once you get into positions, price moves in your favor. Price has a funny way of moving up, moving down, moving up, moving down, and you're just watching it, right? And your emotions are going along with you, because as you see that price move up and down, you're seeing your P&L move up and down as well. And you get moments of elation and you get moments of terror. It's all encapsulated in one trade. And the way that you defeat that is just by looking at the chart, saying, nope, I know price needs to go there, and I'm going to wait for it. I'm going to be patient. If price runs against me a little bit, I'm going to protect myself. But I know which way price wants to go. So having that conviction as a trader allows you to defeat a number of different things. It allows you to defeat the algorithms because you're on the side with them. It's not about defeating algorithms. It's about understanding them and then getting on the side of them. But who you will be defeating are all of the traders using regular TA, indicators, and when I say regular TA, I mean things like head and shoulders, chart patterns, Batman, McDonald's patterns, M patterns, W patterns, all of that stuff. Okay. And the only time that stuff really works is when you're around higher time frame, real levels of either support or resistance. That's when it really kicks in. But when you're on these 5-minute, 15-minute charts, those trend lines and those angles do not work, all right? Because the moves are so parabolic and the price action is so dynamic that by the time you set up a trend line, it gets violated. Here's a good example of this, all right? Let's just take a trend line and let's draw from the top through these first little sets of candles here, okay? Now, if I'm playing a trend, all right, we're just gonna leave it there. I'm gonna drag price action over here, all right? Now, there's enough candles here for me to say I want to draw a trend line here, okay? This is the sort of the origin of it. There's a touch here, and then there's sort of a touch there, right? Depending on if you drag this down to the candle bodies, you have touches here, okay? So you can easily take this and kind of draw it over here. Let me just get my angles correct there, brother. I can just easily draw it here, right? Now, again, you see how I just re-angled that? It's all subjective. So me saying, let me draw it to the candle bodies versus let me draw it to the candle wicks depends on who I am and who I learned from, right? But I have a touch here. I have a touch there. I have a touch there. Maybe I have a touch here. Now, what's the usual rule, right? When price breaks above a trend line, that means it's changing character, right? But this is the fake out. Break above the trend line. Oh, we're changing character? No, we're not. We're not. We're not changing character. And in fact, for all of the folks who are going long, based on this trend line idea, you're going long, look at how hard price moves against you. It doesn't teeter out here and then fall. No, it automatically, it points you. This is what I call pointing you. This is like a stab. We're going to wick you and make you think that you're really winning. And then we're going to come down so hard that you're not really going to be able to react. We're on a 15-minute chart. If you're not next to your charts, this price action will catch you off guard. This is the first signal, okay? So this is the setup, guys. Let me tell you how trend lines will set you up. And this is all recent price action. You can go and look at this on your chart yourself. I'm on the Bitcoin USD perpetual contract Bybit. Going down here, right? We set our trend lines. Now, we break the trend line with a nice little wick, but we come right back down to it, okay? Now, what will most people say? Well, we'll come back down, so, we're just retracing and we're going to come back up. Okay, because when price breaks above a trend line, that means that the trend is changing character, right? Now we're going bullish again. We've been bullish, sitting at these levels, nice bullish candles, right? So we're expecting that again. You have it 1, 2, 3 areas of that. If you're looking at price charts on a 15-minute, you see this. Price comes down, creates a nice little trend line. Yeah, it even gets honored down here. We could even draw this. Like, you see how price will give you just symmetrical areas of price action that you can just line up and make up the story for yourself. You can make up any story by drawing a line, folks. Believe me, I've done it countless times. All right. Point up, point up, point up. Another touch, drop below, increase. Price is changing character? No, sir. Okay. But the full candles are these here. Big, big, nice big candle. Nice big extension. Where's price telling you that it wants to turn around? Okay. Of course, you can always say even set of liquidity here, grabbed, turned. Interior average of liquidity here, grabbed, turned. Okay. Or you can also say that price hit its ultimate objective here. And this was the area to get in, which is why we tried to get in here, right? Just get rid of the trend line example completely because we don't need it. We understand just looking left. Where are the areas of liquidity? Oh, they're here, right there. We've drawn them out from further away as well, okay? To the left. Spike. Where does price need to go next? To these imbalances. Why? It created areas in price that buyers weren't able to get in at, okay? Tell me what you were doing on February 28th, Monday morning at 9 a.m. Were you at the charts to buy? Right? Were you there to take that long? No. And so what the market naturally will do is come back down to these levels to sort of consolidate itself, say, hey, who wants to buy right here? Who wants to buy right here? And you can see people do buy in these areas, okay? But price will say, okay, we caught all of you. Now, where's the other areas that we missed? Think about it. Price has a mind of its own sometimes, and this is the characteristic of what price will do. If this is the way that you need to think about it like that. Price has a mind of its own. It's going to go back to areas where it went from before, especially areas that it didn't have enough buyers or sellers at. That's the easiest way to think about this, folks. So price, hey, we filled this level over here. What else do we have to the downside? Okay, we got all of the buyers in. Okay, how many more people want to come in this little area right here? All right, how many more? Okay, that's enough. Let's start swinging shorter. Why? We got some folks down here too that want to buy, and down here too that want to buy. So it's all about market efficiency. It's all about price going back to these areas again. Now, mind you, if we're on a super hard uptrend and price has been bouncing and bouncing and bouncing from week to week to week to week to week, then our premise would be different. But there's a lot of things that are telling us that price wants to just swing in this range, moving into the FOMC. Okay, so you see, guys, we're trying to capitalize on what we're thinking the areas of the ranges are. This was a really good short to take. Unfortunately, we missed it, but we almost did catch the top when it came to this particular down move here in price. All right, so what are we looking for over the next couple of days? Well, tomorrow's Friday, as we said before. We're not anticipating a lot of price action, but a lot of freaky things happen on Friday. It is Freaky Friday, so there is imbalance to the top and bottom side. So what we'll try to do is start to play out some of these moves in price, okay? So wherever we see an imbalance created, we're just going to start taking chances to see if we can catch when price is going to just turn around and start to reach towards these areas. All right. So we're going to get a little aggressive. Probably the wrong time to do it is over the weekend. But, you know, we've seen the price action for the week. We missed a few major moves, but we saw some things that led us to think that price was going to push up, and it did. And we saw some things that led us to believe that price was going to push down, and it did. Okay. Now, not only are we showcasing these type of things on the 5-minute chart, 15-minute chart, we can zoom into the 1-minute chart, folks. We can get this granular in price and show how price just moves in these ways to go up and down, and fill imbalances in fair market values and price. As it grabs liquidity, it turns around. We can show you this on any time frame, right? But the most impressive place to show it is on the daily, because this is how most people will trade. All right, and we need to go to a different chart to pull this out, but these are additional examples of some of what we're talking about. All right, now I know this chart is very messy and looks very convoluted, but one thing that we always like to point out here, right, is not necessarily how the chart looks. It's really about where we're getting in, where we're getting out, and how after we identify these levels, price does come here. Now, some people may say, oh, well, you drew these lines after price had already touched these areas. Of course, price has to show you a signature, okay? But we drew these lines almost a month and a half ago to 2 months ago. So a lot of this price action was not defined as these lines came to fruition, okay? And go back to some of the first videos. We'll show you where they are, right? And what we're saying is not only does the imbalance liquidity theory get honored on smaller time frames, it gets honored on higher time frames as well. So we're on the Bitcoin daily. Okay, now let's zoom into this a little bit and just take a look. Okay, now where are we scaling in? We like to scale in areas where price has found bottoms before or where there's liquidity sitting. So if we scroll out a little bit, right, price didn't necessarily come and reach these bottoms here, right, which was the price action back last summer. But what did it reach to? All right, let's just go to the last little extension down area in price and look to the left. Okay, look to the left. What do you see? We pointed it out to you many different times. If I put my cursor right here to this last down movement in price, where does this cursor align to? The last imbalance in price, right there. So I'm gonna put it right here, okay? Now follow cursor back the other way. Where is it aligning to? Okay. Very simple, folks. Price action gap right here, okay? There was one right there. There was one right there. There was one, yeah, that was it, okay? Price is gonna come back there. And where's it gonna stop? After it achieves the objective of refilling this price action, okay? You can pull this out on a number of different charts. Now, this is the daily, all right? So let's go over here, okay? So we have our scaling areas, and now we understand why we're looking at these areas for scaling in, okay? So first one, second one. The second one is just another area of imbalance, right? Here. Now, price comes down here. Doesn't necessarily touch this area, but this is a known area where we want to get into trades, right? Where we want to enter into longer term positions. And then once you reach the scale out areas, look what you have to the left here. All right. Big imbalance on the daily candle down. Okay. Price comes up, fills it, comes back down. Objective achieved. I'm going down now. Where? To the next scale in level, right? Back to the scale out. If this shows itself to you on a daily chart, 15-minute chart, right? Eventually, maybe 20 years from now, you'll be able to start seeing this on the weekly chart. That's how price is delivered, folks, right? So without drawing a bunch of stuff on your chart, just understanding where these scale in and scale out areas are, is going to give you a better perspective, right? So to me, I think this scale out area should probably be, we're going to move this down a little bit to this area of imbalance here, right? Because if price spikes these highs, yeah, you know, that's not too far from where we would try to take profits at anyway. And you see the next one set up here, okay? So we have these levels of, and look how sort of aligned they are with sort of flat even prices, right? 45,500, 50,449, right? That's basically 50,450. And then you have 55,777, right? Just look at these numbers, right? The next one up, 63,400. They're pinpoints, guys. They're pinpoints in price, okay? And the all-time high is set at 69,000. So with these numbers here, just ask yourself a question. Do these numbers get set up in a line just based off of human emotions, or do you think that there's computers that are actually running algorithms and codes that say, okay, stop buying here, start buying there? Right? I mean, to me, it sort of shows itself to you if you know how to analyze this the proper way, okay? So that's just breaking it down on the daily. And not only does this take place on Bitcoin, we can show you where this happens on Ethereum. Scale in to scale out. We can show you where this happens on some of the most exciting coins like Terra Luna, okay? Where did Terra Luna turn around? At a scale out position. Final area, order block, getting hit, touched. This is where people last really went in to sell, and this is where they're doing it from again, ultimately, right? So once you start to see these, and where should price go? To these imbalances. This is what we're looking for. Every day, all day. And this is why we're able to pull up these type of things to show you. And this is not, you know, fake, guys. This is TradingView. I can log out of my account, log back in, and show you guys the same exact thing. We're on the website right now. You can see, you know, I can pull my YouTube channel down in here and show you guys, right? Like, this is not a game. Not a game. All right. But at the end of the day, folks, if what we're showing you is giving you some insight to the market, And, you know, we can go through a number of different examples and example after example after example. But I think I've rambled on enough and I've shown people enough why what we're showing you here sort of beats everything else out there. Okay. With the exception of a few. The exception of a few. Now, eventually, things will start to catch on, I think. You know, but right now our audience is very small. So if you happen to be one of our core audience and you tune into these videos every day, share this with people that you know that want to be traders. Don't just sit there and watch it for yourself, guys, right? Because what we're doing is we're building a community of people who can just see this in the market, trade a lot better, and start to reverse all of the negative, you know, things that happen to them in the market. Right? And I've been through the gauntlet, which is why I even wanted to start this channel, you know, in the first place, because there's a lot of folks out there that I feel like I can help, not only when it comes to just how to read price action, how to get in trades, how to get out of trades, but the emotional aspect of it, the planning aspects of it, right? I haven't even showed you guys my trading journal and the things that are in that. I haven't even showed you guys the things that I use to track the market and the things that are in that. Right? We're just showing you surface level price action, but there's so much more that we're going to share and break down in tutorials that we're going to do to give you guys the game. All right. So I think that's it for today, man. You know, this was more of a ramble video. Okay. And the reason why we're rambling on and the reason why we're showing you guys things in price action is because we know that this stuff works and we're just going to keep showing it to you guys, right? Whether it's through the trading challenge or not. All right. It doesn't matter if we don't take a trade. We can show you why price is doing the things that it does. All right. That's Luna. Let's talk about AVAX. Same thing. Scale in, scale out. We can go down a number of different charts here. All right. And there are some that do not exhibit this activity, right? Because they're sort of stuck in sort of consolidation zones. And these are still good areas for you to scale in when it comes down to it, okay? Because you're going to get launches out of these areas. And discount low premium, all of these different zones, we define them in the tutorials that we put out in previous videos, okay? So this weekend, my pledge and my promise to all of the viewers, all of the folks who tune into us on a regular basis, we are going to put together the tutorial. And this is going to be a sort of a part, it's going to have parts to it. There's too much to cover to get to this point. There's too much to cover for me to just do one video and you guys get everything in that one video, right? We're going to talk about the mentality that you need to take into setting up a system like this. We're going to talk about how you find the price levels. We're going to talk about how to set up a watch list. We're going to talk about how to automate this to the point where once you get proficient in finding these things, you can literally set up limit orders in Coinbase, TradingView, whatever you use to trade, right? And sort of just let the system go into effect. And, you know, you'll be your own trading bot per se. All right. So hopefully this information has been helpful, useful, informative to some folks. If this has offended you, then I apologize. My goal was not to offend anyone. My goal is to educate. My goal is to let people know where the real sauce is. And it's right here, folks, at the long and short. So salute. Thank you for tuning in. It's your boy Maestro. We out of here. Peace.